So if you're like me, you've been watching these interest rates tick down and tick down and tick down and think, maybe it's time to actually refinance this mortgage that I have now. Well, if you are thinking about that, you better hurry, because the government just did something that not only made the bank mad, but it made the government mad. If you want to know what it is, stick around and I will tell you. I'm Caroline Reed with The Real Deal, where we give you the confidence and the clarity that you need to make the right real estate decisions for you. And today we're going to be talking about this new adverse market fee, this new fee on conventional refi packages that is going into effect December 1st. But before we get into that, if you appreciate this kind of content, feel free to go below and click the subscribe button. So it's the end of business day on August 12th, when everybody pretty much had gone home for the day, when the FHFA, the Federal Housing Finance Agency, puts out a memo, drops this little bombshell on everybody, announcing a new fee for all conventional refinancing packages. It is called the Adverse Market Fee, and it is a 0.5 point fee added to closing costs for all new conventional refis. And the kicker on this thing is that it said it is effective September 1st. Well, if you've ever bought a home before or refinanced a home before, you know that this takes more than a couple weeks to get all of this done. So effectively, it was effective immediately, because anything that was already in the pipeline was not going to be able to get closed by that September 1st deadline. So the banks freaked out, because that meant that the banks who can't now go back and charge these new fees to their to their customers, those banks are going to be on the hook for millions and millions and millions of dollars. So they freaked out. And even the government freaked out. There's a whole bunch of senators and congressmen who have written letters to the FHFA to say, what are you doing? So why did they do this? Well, they say it's to cover for market uncertainty. And I kind of get that. There's some uncertainty in the market right now. There's a little bit of uncertainty in everything right now. But I think they are trying to cover what they see coming up as future losses with once the forbearances end and the foreclosures come back into play, because they're on pause for right now, but some of those are going to happen. So I think they think there's a wave coming, and they're trying to cover some of their losses. But what I don't understand is that if you're trying to cover risk in the market, why cover it where it's not risky? Refinances aren't as risky because you've got somebody who's made their payments. They're doing fine. They're refinancing to get a better rate and get a lower payment. They're getting a lower payment, so it'll be easier for them to afford. So refinances are traditionally less risky than new purchases. So if this is a risk thing, why not put it on the new purchases? Why put it on the refinances? I don't know. But the kind of good news is that since then, just a couple days ago on the 25th of August, I guess there was enough of an uproar, enough clamor out there that the FHFA came back and said, okay, not September 1st. We're going with December 1st. And before we get into what all of this is going to look like for you, do me a favor and go right down below and hit that like button. So what does all this mean for you? Well, it's important to know a few things about it first. It's important to know that this is on conventional refis only. It is not on FHA or VA or USDA or on jumbo loans. It's only on loans over $125,000, and it doesn't matter whether you cash out or not. And probably most importantly, it's really important to know that this loan, if you're thinking of doing this loan has to settle by December 1st. And when I say the loan has to settle, that means that not only do you have to close on it, but if your bank is going to sell it to the secondary market, they have to have time to do that as well. So it's not closed by December 1st. It's closed before that, so the bank has a chance to do whatever it is that it's going to do with that loan by December 1st. And what does this look like financially? Well, a half a point. So if you are refinancing for a $300,000 loan, you're looking at a new line item on your closing costs of $1,500. Or the bank will adjust your interest rate up by 1/8 to 1/4%, roughly. And if you've been watching those rates, you may have seen that the rate has ticked up just a little bit. As soon as they made that announcement, those rates ticked up because the banks needed to make sure that they were covered for all of these losses that they were going to get because these loans were not going to settle by that September 1st deadline. Well, now that the extension has been made and it's December 1st, I'm hoping they should tick down a little bit more, get back to where they were before, and they'll stay there for a while, hopefully. This is what I think anyway. They should stay there for a little while. But the closer that we get to the end of October, actually maybe the middle of October, certainly by the end of October, and absolutely by November, those rates are going to keep steadily going up just a little bit because the banks are going to need to make that adjustment to make sure they have those fees covered by you, and so that they don't have to take those losses themselves. So if you're thinking of refinancing, do it now. Do it soon in the next couple of weeks because you're going to want to take some time to shop around most likely. You want to get that done, get a rate in, get it locked, and make sure that you get that refinance going and closing by the end of October so the bank has time to settle it by the end of December. So, with all this being said, if you are thinking about refinancing and you are still at square one, feel free to click on the link above and watch my video that will let you know how to correctly get a valuation of your home. Thanks for watching, everybody. See you soon.